US-UK Task Force on Crypto and Capital Markets. The financial world is in the midst of a transformation unlike anything seen before. Digital assets, blockchain technology, and cryptocurrencies have moved far beyond niche discussions into mainstream finance. Governments, regulators, and investors are now grappling with the question of how to integrate these innovations into the global financial system while maintaining market stability and protecting investors. Amid this backdrop, the United States and the United Kingdom have taken a historic step: the creation of a joint task force focused on cryptocurrencies and capital markets. This transatlantic initiative marks a new level of cooperation aimed at harmonizing regulations, fostering innovation, and providing clarity for businesses and investors operating across borders. The announcement, made during a high-profile diplomatic visit, underscores the recognition by both nations that digital assets are rapidly becoming a central element of modern finance. Cryptocurrencies are no longer confined to speculative trading. They're increasingly being used for payments, corporate treasury operations, fundraising, and even considerations related to national financial policy. The absence of clear regulatory frameworks has created uncertainty, which can discourage investment, limit liquidity, and increase systemic risks. By collaborating at a transatlantic level, the US and UK hope to bridge gaps, align standards, and make it easier for firms to operate internationally. The task force, officially called the Transatlantic Task Force for Markets of the Future, brings together regulators, financial authorities, and industry experts. Among the key areas of focus are the regulation of stablecoins, interoperability of asset custody frameworks, and enhancement of anti-money laundering protocols. Stablecoins are particularly important because they are often pegged to fiat currencies like the US dollar or British pound and serve as the backbone of many cryptocurrency transactions. Any instability or regulatory inconsistency could have significant consequences not just for markets but for investor confidence. Industry leaders and financial analysts have praised the initiative, noting that a coordinated approach between the two largest global financial centers could significantly reduce regulatory complexity for international firms. A harmonized framework would not only encourage innovation but also attract investment by providing businesses with a clearer roadmap for compliance. This initiative highlights a strategic shift in policy thinking. While financial regulation has traditionally been domestic, the borderless nature of digital assets demands international cooperation. Transactions occur instantaneously across countries, and tokens can be stored and traded globally. The task force therefore represents a forward-looking response to the realities of a digitized financial world, where collaboration may define the next phase of crypto adoption. The timing of this initiative is also notable. The announcement followed high-level meetings in London attended by top officials from Treasury, the US Treasury, and regulators including the Financial Conduct Authority and the Securities and Exchange Commission. Executives from major crypto firms such as Coinbase, Circle, and Ripple were present, along with representatives from leading global banks. The presence of industry stakeholders ensures that the task force's work will reflect the priorities of businesses and investors while maintaining the public interest. Regulatory objectives and priorities. The primary goal of the US-UK Crypto and Capital Markets Task Force is to align the regulatory approaches of the two nations to create a coherent and unified framework for digital assets. At the heart of this initiative is the recognition that fragmented or inconsistent rules can hinder growth, increase compliance costs, and ultimately reduce investor confidence. The task force aims to address these challenges by reviewing, harmonizing, and coordinating regulatory standards across multiple dimensions of the digital asset ecosystem. One of the most important areas under review is stablecoin oversight. Stablecoins, digital tokens pegged to traditional currencies like the US dollar or British pound, play a critical role in digital finance. They are widely used for trading, payments, and liquidity management within crypto markets. However, due to their widespread adoption, regulatory gaps or uncertainties around stablecoins could pose systemic risks. By focusing on stablecoins, the task force intends to ensure that both the UK and US adopt consistent standards for issuance, operational transparency, and risk management. Aligning these standards will make it easier for firms to operate seamlessly across borders, reducing friction for investors and companies alike. Another major priority is the interoperability of regulatory frameworks, particularly in areas like asset custody and anti-money laundering. Cryptocurrency firms often operate internationally, but they face different sets of rules depending on the jurisdiction. These inconsistencies can create challenges, particularly for firms managing assets across multiple countries. By creating a shared regulatory lens, the task force seeks to harmonize standards for custody, record-keeping, and reporting. Anti-money laundering regulations are equally critical, as digital assets can be misused for illicit purposes if safeguards are weak or inconsistent. The task force will examine existing frameworks, identify gaps, and recommend measures that provide robust protection while supporting legitimate market activity.
The task force will also assess how regulatory alignment can attract investment. For the UK, which is competing to remain a global financial hub, this alignment could draw more American capital into British markets. Harmonized rules will lower barriers for firms raising capital internationally and create a more predictable environment for investors. In the US, regulators are also motivated by the need to maintain technological neutrality while fostering innovation. By collaborating with the UK, the US can ensure that its domestic approach to digital assets remains competitive and forward-looking, especially as other countries develop their own regulatory regimes. Beyond immediate regulatory alignment, the task force is exploring long-term innovation strategies for wholesale digital markets. This includes examining emerging technologies, decentralized finance platforms, tokenized securities, and other next-generation financial instruments. By engaging with industry stakeholders, including major crypto firms, global banks, and fintech innovators, the task force can anticipate trends, mitigate potential risks, and provide actionable guidance that encourages safe market growth. The operational structure of the task force is also designed for efficiency and accountability. Chaired jointly by officials from HM Treasury and the US Treasury, the task force includes senior representatives from the FCA and the SEC. Industry experts are regularly consulted to ensure that recommendations reflect real-world business priorities while maintaining investor protection. The task force is expected to provide its first set of recommendations within 180 days, creating a clear timeline for actionable results. These recommendations will guide both governments in crafting domestic regulations that are consistent, forward-looking, and conducive to global collaboration. Finally, the initiative reinforces trust and stability in digital asset markets. By establishing a transatlantic approach, both governments send a signal that cryptocurrencies and related technologies are not a regulatory afterthought. Instead, they are recognized as an integral part of modern finance that requires careful oversight, international cooperation, and continuous adaptation to technological advances. This trust is essential for institutional adoption, investor confidence, and long-term market growth. Crypto adoption trends and institutional involvement. As the US-UK Crypto and Capital Markets Task Force moves forward, understanding the current landscape of digital asset adoption in both countries is crucial. Adoption metrics, regulatory developments, and institutional participation all provide a picture of where these markets stand and where alignment could have the most impact. According to the latest Canalys Global Crypto Adoption Index, the United States ranks second worldwide in terms of crypto adoption. This high ranking reflects several factors: strong institutional engagement, widespread retail participation, and progressive regulatory steps that have encouraged market growth. Institutional investors, including major asset managers and banks, are increasingly entering the crypto space, bringing with them large capital inflows, enhanced market liquidity, and professionalized practices. The presence of firms like Coinbase, Kraken, and Circle has also facilitated broader access to trading, custody, and investment services, allowing individuals and businesses alike to participate safely and efficiently. In the UK, which is ranking 11th globally, remains one of the most significant hubs for crypto activity outside the United States. London has long been a financial center, and recent regulatory initiatives have further reinforced its status as a key node in the digital asset ecosystem. The Financial Conductor Authority has accelerated approvals for crypto firms, cutting review times by approximately 2/3. For instance, in 2024 alone, 5 major firms, including BlackRock and Standard Chartered, received registration approval, increasing approval rates from less than 15% over the previous 5 years to 45%. This proactive approach signals the UK's commitment to remaining competitive on the global stage while maintaining rigorous oversight. However, adoption is not without challenges. Stricter compliance rules have reduced the total number of applications in recent years, dropping from 46 in 2022 to a range of 23 to 26 in 2024. Additional regulatory tightening is underway, including requirements for platforms to collect detailed customer information on every trade, in line with the OECD's global reporting framework. The FCA is also consulting on whether crypto firms should be held to the same governance, financial crime, and consumer protection standards as traditional banks. These steps demonstrate the UK's balancing act, promoting growth and innovation while ensuring market integrity and consumer safety. Institutional involvement in both countries highlights the significance of the task force's work. Large-scale investments, venture funding, and strategic partnerships are increasingly shaping market dynamics. Global banks such as Bank of America and Barclays are actively participating in the digital asset space, not only investing, but also advising clients and supporting market infrastructure. Meanwhile, firms like Coinbase, Circle, and Ripple are at the forefront of developing interoperable solutions that can operate seamlessly under both UK and US regulations. By establishing clear, harmonized guidelines, the task force can reduce operational friction and encourage further cross-border activity. The task force also considers adoption trends from a technological perspective. Innovations in blockchain, decentralized finance, and tokenized financial instruments are driving market evolution. Retail and institutional investors alike are exploring products such as tokenized bonds, digital securities, and yield-generating protocols. Ensuring regulatory alignment between the US and UK allows these products to scale internationally without creating legal ambiguities or compliance bottlenecks.
Moreover, the task force is evaluating market stability in the context of adoption. Rapid growth can expose markets to volatility, cybersecurity risks, and operational challenges. By understanding adoption patterns, regulators can anticipate potential stress points, design risk management measures, and maintain investor confidence. Stablecoins, in particular, are a focal point. As high-volume instruments used across both nations, their regulation is critical to ensuring financial stability while enabling efficient capital flows. Finally, adoption trends underscore the strategic importance of transatlantic collaboration. U.S. firms benefit from access to European markets, while UK firms gain from institutional participation and liquidity in the U.S. By synchronizing policies, both governments aim to create a frictionless environment for capital raising, trading, and custody. This collaboration has the potential to position the US and UK as global leaders in digital finance, providing both competitive advantage and economic growth while ensuring that innovation is responsibly guided and systemically safe. Conclusion and future outlook. As the US-UK Task Force on Crypto and Capital Markets moves forward, its creation signals a new era in global digital asset regulation. The collaboration between the two largest financial hubs in the world demonstrates a shared recognition of the transformative potential of digital assets, while acknowledging the necessity of robust oversight. By harmonizing approaches on asset custody, anti-money laundering standards, and stablecoin oversight, both governments aim to create a predictable and efficient regulatory environment that can support growth without compromising stability. The Transatlantic Task Force represents more than just regulatory alignment. It is a strategic response to the rapid pace of technological change in financial markets. Digital assets are evolving at an unprecedented rate, and traditional regulatory frameworks are often too slow to adapt. By coordinating policies, the US and UK can avoid regulatory fragmentation, reduce operational friction for firms, and provide clarity that encourages both domestic and international investment. For businesses, this translates into a more secure environment for launching innovative products, raising capital, and scaling operations across borders. For investors, it means greater confidence that their capital is protected under transparent and enforceable standards. Long-term, the task force could reshape the global financial landscape. As the US and UK work toward a unified approach, other nations may look to their framework as a benchmark, effectively creating a model for international cooperation in digital asset regulation. This could enhance cross-border liquidity, enable more seamless capital flows, and foster innovation on a scale previously constrained by jurisdictional differences. Stablecoins, in particular, have the potential to serve as foundational tools for cross-border payments, settlement systems, and digital finance infrastructure. Coordinated oversight ensures that these instruments remain reliable, reducing systemic risk while promoting market efficiency. Institutional involvement further amplifies the importance of the task force. Banks, asset managers, and technology firms are not just passive observers, they are active participants shaping the evolution of the market. Their insights and engagement help policymakers understand the practical implications of regulation, while their investment in digital infrastructure accelerates adoption and market maturity. By incorporating feedback from these industry leaders, the task force can create rules that are not only protective but also growth-oriented, striking a balance between innovation and safety. The task force also underscores the broader economic and strategic implications of digital assets. For the UK, this initiative supports the country's goal of remaining competitive in global finance, attracting American investment and positioning London as a hub for fintech innovation. For the US, it reinforces a technology-neutral approach that encourages digital finance while safeguarding financial stability. Together, the countries are setting a precedent for transatlantic collaboration that could extend beyond crypto into other areas of emerging financial technologies, such as decentralized finance, tokenized securities, and blockchain-based settlement systems. However, the path ahead is not without challenges. Crypto markets remain volatile, with regulatory gaps and technological risks that could impact adoption and market confidence. Cybersecurity threats, operational vulnerabilities, and unforeseen global events all pose potential risks to the stability of digital finance. The success of the task force will depend on continuous monitoring, adaptive policies, and open dialogue with industry stakeholders to ensure that regulation evolves in step with innovation. In conclusion, the US-UK Task Force on Crypto and Capital Markets is a landmark initiative that demonstrates foresight, collaboration, and a commitment to shaping the future of finance. By fostering regulatory alignment, encouraging cross-border investment, and supporting innovation, the task force is laying the groundwork for a digital asset ecosystem that is both secure and dynamic. For investors, businesses, and policymakers alike, this initiative represents an opportunity to participate in the next phase of financial evolution with clarity, confidence, and resilience. The launch of this task force reminds us that digital assets are not just a niche market, they are becoming a core component of modern finance. As governments, institutions, and innovators continue to navigate this rapidly evolving landscape, the principles of stability, trust, and collaboration will remain essential. For the global financial community, the US-UK Task Force is more than just a regulatory exercise. It is a blueprint for sustainable growth, responsible innovation, and transatlantic leadership in the era of digital finance. With recommendations expected in early 2026, all eyes will be on the task force to see how its work shapes the regulatory environment, impacts market activity, and sets the standard for global digital asset governance. The coming months and years could define not only the trajectory of crypto markets in the US and UK, but also the future of cross-border digital finance worldwide.